Hello everyone, a very good morning, good afternoon, and good evening to all of my viewers from around the world. This is your host Vaibhav. In today's session of JForex Indicators Explained, I will be explaining to you one interesting indicator. This is a dynamic indicator, and its name itself has a dynamic word included. The name is McGinley Dynamic Indicator. It is named after its inventor who devised it to avoid some of the drawbacks of the moving averages. We have already seen various moving averages like SMA, EMA, SMMA. So we have seen how we can utilize these various moving averages to devise entry and exit points to trade in a profitable manner. There, we had also discussed some of the drawbacks of the moving averages like lagging effect, and even if the market happens to be sideways, in those cases, there is a whipsaw in cases where we see moves on one side, but those moves are not really sustained, and after just a couple of candlesticks we get reversal of sort happening on the price action. So in those kind of cases we have seen that the moving averages don't really help much. So we will see we can how we can use these indicator, the McGinley dynamic, to kind of reduce some of that drawbacks. We can't really eliminate all of those, but we can to some extent at least reduce some of the lag, and we can make this indicator more responsive to the price action. So we will see its application on the JForex platform, the newly released JForex 4 platform. This is the chart of the Euro USD drawn on the hourly time frame here. You will find the McGinley dynamic included among the overlap studies, or you can simply do a quick search. Alright, so here it is, MD. Now this has been plotted with the default setting of the candle period calculation being 30, and here we can see that this is a lot more smoother. The plotting is a lot more smoother, the curves are smoother whenever we have these moves and reversal. Also we have these dynamic indicator responding well to the price action data, and as I said, we will have this McGinley dynamic indicator with a lot more responsiveness to the price action, but at the same time, it is not going to show too many whipsaw moves in its plotting, and it is generally speaking, it is going to remain smoother whenever we have this sideways kind of momentum prevailing in the underlying instrument. When the underlying instrument doesn't really go anywhere and it remains in a narrow trading range, in those kind of market situation, it will be almost flat or slightly inclined on the higher side or on the lower side depending on the price action data. So here you can see that this is more of an smoother version of various moving averages, and we can utilize this indicator to look for trend, whether it is bullish or bearish, and you will see that it remains kind of flat when we have sideways momentum prevailing. So if you compare the MD's output value for current hour or for last candlestick grid to say couple of candlestick period back, then you will get a good idea of what the trend is. If it is strongly upward, then we will have kind of a significant change in the output value of the MD. And if we see that there is not much of an momentum, then we will not be seeing much of a change in the McGinley dynamic indicator. So we can utilize this indicator to make a assessment of the market sentiments, if there is momentum or not, and at the same time, along with the momentum, we can also infer the direction of the market. If we see it in decline, then that is indicative of the underlying bias being slightly bearish, and if it is on the rise, then it is indicative of the market sentiment bias being on the bullish side. So in both these situations, the indicator will help you assess the market scenarios and plan your trades accordingly. So all you have to do is rely on these changes in the McGinley dynamic. And here there is one interesting property that it tends to show kind of responsiveness whenever there is strong move on either side. So it won't be taking too much time for trend reversal. We will see that if the price action has changed substantially, it has crossed over from one side to another, then in no time the McGinley dynamic will also change its trajectory, and it will help you stay on the side of the trend. And even in the markets where we see frequent moves from one side to the another, from bearish to bullish or from bullish to bearish, this indicator is going to keep you abreast with the fresh price momentum. Now, if we consider its uses, you can utilize this indicator as a support and resistance also, but that should be preferably done in the strongly trending market. But if we have the market sentiments sideways, then we can't really use this as a support or resistance level, as it will be mostly crossing in between the price action data. So only in scenarios where we have substantial move, one-sided moves on either side, if it is bullish, then if we see strong deviation and then convergence towards the MD line over next couple of hours on the hourly time frame, then we can utilize these as a support zone and plan our trades accordingly. And similarly, when the market dynamic is negative, we can take the trades on the lower side, and we can go short. And when we have flatlining of the MD dynamic, then that is indicative of the markets gone sideways. And in those kind of scenarios, it is not really advisable to use this as a support and resistance zone. So there are many ways you can utilize these indicator formation. As I said, you can compare the output value of the MD over two different points in time, and depending on that, you can make your assessment. If there has been a substantial move on upside, then that is considered as strongly bullish. If there has been substantial move on the lower side, then that will be indicative of the strongly bearish sentiments. And if it is not changing much, then that should be considered as sideways. Now coming to its editing option, let's see how we can customize this indicator to take advantage of the changing dynamic of the market. Oops, I think I have removed it. I will add it again. All right. So here it comes back. Now coming to its editing option, edit indicator. The applied price can be anything depending on your chosen preference: the close price, open price, high price, low price, median price, typical price, or weighted close price. You can take any of these applied price as the calculation base for this McGinley dynamic, and depending on that, you will see that its plotting will vary. If you use this high price, then it will shift on the higher side. If you use low price, then you will see MD shifting on the lower side. So lot depends on what kind of applied price you are using, and accordingly the calculation for the output value of the McGinley dynamic will be done. The calculation formula is a bit complex. It takes into account the prior period's McGinley dynamic output value and also considers the closing value of the current candle, and along with that we also use constant is generally zero point 0.6. So we utilize this price formation information to arrive at a appropriate smoothing factor, and then we can use this to define the trading situation. Now to vary the calculation period, all you have to do is change its calculation period from lower to higher. If you want to make it more responsive to the price dynamic, then you have to utilize the lower calculation period for the calculation of the MD. And if you want it to be less responsive but more reliable for the longer term trade, then you have to again increase its calculation period. let's try 100 and see how it changes on the 100 candle period. So here it will be a lot less responsive, but it is of course going to be a lot more smoother, and it won't be showing much of an impact unless the trend reversal happens from one side to the another. Only in that scenario, when the price action shifts from upper side to the lower side or from lower side to the upper side, we will see in next coming hours the MD output value also shifting gears, and it will change the plotting of this MD indicator in consonance with the market price action data. Alright, so that's how this indicator works. Let's see what more can be done. So I will now revert it back to say 24 so that we get the plotting of the MD using last 24 hours, that is 1 day's worth of data. The output can be styled up. If you don't really like single simple line, then you can style it up. All these options are there. You can increase its width. If you see that it is looking too prominent, then you can lower its transparency, opaqueness. So here we have these MD line now plotted in a manner of dots with this output value. Levels, we get these levels, and then comes the advanced option to calculate on new candle. So if you opt for this, then this output value will remain constant regardless of how this current closing value is behaving, and only when new candle formation will take place in next hour, the prior hour's closing value will be taken into consideration, and accordingly new output value will be defined, which will again then remain constant for whole of the candle period. Highlight the time period zone. You can highlight the calculation time period used for these McGinley dynamic. Calculate from custom data. You can define the instrument, or you can simply use it from the chart. Same thing you can do with the candle period. You can use it from the chart, or you can define it starting from 10 seconds to all the way towards month, and whatever is your chosen time period for the plotting of the MD, that particular candle period will be used regardless of what the time frame of the chart is. So for example, if I make it 15 minutes, then the plotting of the McGinley dynamic is going to be based on the 24 candles of 15 minutes each, and even if the chart is of the hourly candle period, we have this McGinley dynamic defined using the 15-minute candle period data. Alright, on shorter time periods, on shorter periods, display values at custom period end, start, middle, or each new candle that can also be defined. Then you can use the spread side from the chart, or you can define it ask or bid as per your requirement. And if you want the indicator to be shown on all the periods, then you have to opt in for this. If you opt out of it, then you will have to define the candle period on which this indicator needs to be plotted, and only on that particular time frame the plotting will be done. And if we change the chart to another candle period, then no plotting of the McGinley dynamic will be visible. So now on the half an hourly time frame there is no plotting. Alright, so this is now back again. Base period can be anything from 4 hours, none, to 1 week, and it is not going to make much of a difference in the output value of the McGinley dynamic. So guys, that's it from my side for today's session of JForex Indicator Explained, where we consider the possible uses of the McGinley dynamic indicator. And if you have any query or any idea to share, you can write back to me in the feedback section, and I would be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. The link for the JForex 4 platform has also been included in the bio, so do check it out. I will be back tomorrow with a new indicator. Sorry, not tomorrow. I will be back on Monday. Now we have 2 days off, so enjoy the weekend, guys. See you on Monday. Goodbye.